One of the icons of Hollywood is really in trouble after talks to merge Skydance and Paramount broke off over the past week. Now, this is a deal that had been kind of in limbo and all over the place. It's a very convoluted potential merger. But I think what a lot of investors were expecting was that Paramount was eventually going to find a new home for the assets that the company has. They would put it in a much better financial position and a much better strategic position. One of the things I've been talking about here on asymmetric investing for well over a year is the idea that the media market is now in a world where we're going to have what's called the smiling curve, where there's going to be companies who reach scale in the streaming business, who have hundreds of millions of streaming subscribers. They're able to charge them monthly fees. They're able to serve them ads. They're able to monetize those users in a really effective way. You're going to have user-created content like you see on YouTube, where you're watching this here. So that's going to be a totally different cost structure than making a movie or a TV show. So those are going to be the value ends of the smiling curve. That's where you're going to be able to make content and actually make money. But the companies that are going to be lost in the middle are going to be the equivalent of the Reddits, the Snapchats, the MySpaces of social media. The companies that are kind of lost to time because they weren't able to figure out a business model because they didn't have scale that competitors like Meta had, and they didn't have a powerful niche behind them in the market. So the equivalent of those kind of companies are going to be the Peacocks, the Maxes, and the Paramounts of the world. So I want to dig into Paramount today because this is one of those companies that I think we're seeing this happen in real time. You're seeing Netflix get more and more powerful in the streaming business. You're seeing Disney actually display a fair amount of power. They're now bundling in a number of different ways. They're increasing their prices. They're introducing more ads. So I think they're in a pretty good position. But Paramount, what in the world do you do with this asset if you own Paramount? So I want to get to the financials and what a tough strategic position they're in today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video's sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's go through a few numbers first. The first is revenue and net income. You can see that revenue has just stalled out, not necessarily dropping, but really not going anywhere over the last couple of years. There's a number of dynamics that go into this. One is that cable networks just simply don't have the same pricing power that they used to, and the number of users who are paying for cable are declining. Now, the potential positive would be, yeah, but people are paying for more streaming. The problem is that streaming, if you haven't reached scale like Netflix has and Disney has, at least barely in the most recent quarter, if you don't reach scale, you're not going to be profitable. That's what you're seeing with Paramount Plus. They're just not a profitable streamer yet. That's leading to the losses that you see here. How do you respond when you're losing money and your revenue isn't growing? Well, your only real option is to cut expenses. If you cut expenses, how are you going to expect to have the kind of content that people are going to want to watch on streaming? So this is a downward spiral from a content perspective if you're a company like Paramount. And that's really fundamentally how things go with this smiling curve, is you're either on an upward spiral where you can afford to buy more content, that attracts more users, that means you have more money to buy more content, and on, or you're in a downward spiral like you see with Paramount. So I don't see anything that is breaking this right now. The other thing is that Paramount has a pretty bad balance sheet. You can see here the $14.6 billion in long-term debt, just $2.4 billion in cash. And you can see here that there's just not a lot of cash coming in either from operations or a free cash flow perspective to be able to fund the business. So what in the world do you do if you're Paramount? There's just not a lot of options unless you're going to get acquired by somebody else. And then you get to the problem of who in the world can buy Paramount. I don't think that the current regulatory environment would allow a Netflix, an Amazon, or even a Disney to buy a company like Paramount. In fact, I think the big tech companies probably wouldn't be able to buy them at all. So you have to look for a merger partner that's kind of one of your equals. That's kind of what the Skydance deal was. And they weren't able to figure out the details behind that. And so now both of those companies may be in more trouble because they don't have a really solid strategic position. And so this is really the fundamental problem behind Paramount's current situation. I just don't see any easy way out of it. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So if the status quo is not tenable for Paramount, and it doesn't appear that it is, what sort of options that you have? Well, you could go all in on the streaming business, but I've laid out why I don't think strategically Paramount has the content or the scale to be able to do that. And you already have two companies that have over 100 million subscribers in Netflix and Disney. Those are really the two power players. You would have to beat them at their own game to be able to be a powerhouse in streaming. So what's the other option? The other option is to say, you know what, we're going to shut down this streaming service. We're losing money. It's not working for us. We're going to take all of this valuable content that we do have, and they do have valuable content, and instead of just putting it on cable channels and trying to sell it that way, we're going to sell it to other streamers. So you take a money-losing business and you turn it into a money-making business. I think this is really the only option that Paramount has. Let's just look at some of the assets that Paramount has to work with. You have all of the Nickelodeon-related assets, so SpongeBob SquarePants. Paramount Pictures has a ton of movies. You have the Mission Impossible movies, Mean Girls, Paw Patrol, Transformers, Top Gun. Paramount controls MTV and Comedy Central, so all the content that's under there. And then, of course, CBS as well. So as every one of the other streaming companies adds more of their content from broadcast TV, there's got to be some value in that CBS content, including the NFL. The problem is Paramount is playing from a position of weakness, not a position of strength. You do have to make really hard decisions about what the streaming business looks like long term. I think they should just get out of that business because being one of the money losers in the streaming business is just going to be a terrible place to be long term. They do have valuable assets, so they could license those assets to other streaming companies, other content companies. Even use YouTube as an example for a place where they could put some of this content. I think this is naturally what's going to happen with the media business as we move to more and more streaming, is that you're going to have fewer and fewer power players in the market. There's going to be a couple of streaming services that a vast majority of people are going to subscribe to. Those are going to be bundling assets together effectively. Netflix is doing that basically all under the Netflix banner. Disney is doing that partly under Disney banners like Disney Plus, Hulu, and ESPN Plus eventually, but they're also making a deal with Warner Brothers Discovery to include the Max streaming content in the Disney Plus subscription, so another bundle option. But notably, they did not make a deal with Paramount because I think Paramount is still trying to make it on its own. So what is the company going to do? I think they have to figure out a way to license the content that they do have to other people, focus on that content creation piece because the balance sheet is just not strong enough to be the kind of business that you can operate on its own. And we've seen that the cash flow and the net income that you have from the business is just not very strong right now. So you have to make some really hard decisions. Look for this over the next year. Don't be shocked if you see some of these streaming services shut down and you go to more of a licensing model where the leading streamers are just licensing the content from content creators. I think that makes sense long term, but it seems that Paramount is having trouble facing that reality. And I think that's really the challenge. These are major challenges that family businesses, and the Redstone family still controls a vast majority of Paramount, but they're not used to being in a position of weakness. They're used to being in a position of strength. That has changed dramatically as streaming has really taken over. And either they face the music soon or they're going to face even bigger problems long term. So what do you think about Paramount in the future of streaming? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.